Hi, welcome everybody to our YouTube channel called Fast CPA and Consultants. I'd like to introduce our CPA, Fulton Abraham Sanchez. Welcome, Fulton.
Hi, Sarah.
If you're visiting us for the first time, we created this series called Tax Talks, where you send us your questions through email, social media, and today's topic is taxes for citizens and foreign companies in the USA. We have our first question. Can a foreign company buy a property in the USA?
Yes, it can. There is no any prohibition that a foreign citizen and a foreign company buys property in the USA. If the company is if a foreign company wants to buy property in the USA, it will need to register with the IRS and obtain an EIN number or employer identification number, a tax ID. The objective of needing to report the holdings of this property or properties to the IRS. But yes, the company can buy, or the individual and foreign company can buy real estate here in the US.
Second question. What is the difference when reporting taxes between a foreign owner and a US citizen?
The US citizen is obligated to report on the income that he or she receives in the USA and the income that he or she receives in foreign countries. It's what is called a worldwide income inclusion, meaning that wherever the income is coming from and the person receiving or the recipient of that income is a US citizen or a US resident, all the income received in the US or from foreign countries needs to be reported to the IRS. Now, even providing there's an obligation, the taxes paid in the foreign country are a credit that needs to be taken in the on the return when there is the fine.
Okay.
Now, in addition to that, when the company buys the property in the USA, the foreign company will be subject to something that is called FATCA. That is a tax, I'm sorry, as retention that the at the moment of the closing, the attorney or the title company that is the one in charge of, doing the transaction of the sale of the property held by the foreign company will withhold up to 15% of the proceeds of the transaction, and later on the company will need to file a tax return to pay the taxes of the capital gain for the gain that they had when they sold the property, and pay those taxes and claim a refund. That's something that is called FATCA.
Understood. Third question. I want to open an LLC in the USA and I own several properties. Is it better to have one company for all properties or one company for each property?
It will be better to have one company for each property. Now, that will be cumbersome because you will if you have a large portfolio, you will have to open many entities, and that is not practical. What we have seen, or we have experienced with clients, is that they open one company. This could be an LLC or an S corporation. Let's say LLC. They start holding properties, holding, and then they create what is called a land trust. A land trust is a trust that fractions the risk. So if you have a portfolio of 10 properties, you create 10 land trusts and put each of the trusts to the original property. So you have property number one, property number two, property number three. You put land trust number one, land trust number two, land trust number three, till you get all the properties covered with a land trust. The objective of that is to limit increasing the asset protection and limit the risk. The problem with holding many properties in one company is the risk that you have if one tenant who is living in one of the properties got an accident, and if the insurance or the assets of that entity of the where he lives, the asset, meaning the property, is not enough to cover the damages, and your insurance is not enough to cover those damages either, the aggravated person will come after the rest of the properties that you have in that company. That's a real problem of holding many properties into one entity. That's the risk. The risk that anything happens and you have to respond with many entities within the many entities that you have within the ownership of the property. So 100% protection is one property, one entity LLC. If you don't want to open multiple LLCs, you can put the properties within the LLC, but you need good insurance, homeowners insurance. You need good liability insurance, like the blanket insurance. It's called liability insurance. It's a blanket coverage for the portion between the homeowners insurance and anything beyond that the homeowners insurance doesn't cover. You need that, and in addition, you need a land trust, and the land trust will be the beneficiary of each of the properties. That way, those three things you will need to make your property sound. And even though if there is any risk, someone falls, someone sleeps, you will be able to protect the rest of the investment if that property is compromised.
Understood. Fourth question, how should a business bank account be reported in another country?
The foreign account, when the company is owned by a U.S. citizen or U.S. resident, needs to be reported in something that is called FBAR. We have a video about the FBAR as well. We have a video about FATCA. And the FBAR, its responsibility is the reporting from every single foreign account. In this case, if there is for example, if there is a business with a bank account that is reported in another country, meaning that the account is in another country, the business in the USA needs or has the obligation to report that account to the IRS. There's no need to pay taxes. The only thing is that you need to report it to the IRS.
Get it. Next question. If my company is in Florida, but I have employees in other states, do I report taxes in those states or just in Florida?
Just in Florida. Oh, no, wait, no. You report for Florida the employees that you have in Florida. If you have in multiple states, you have to report those employees. You have to report it in every single state.
And a last question. If I am selling a property in Europe, can I deduct that on my tax report in the USA?
Yes. If you sell property in Europe, and this is provided you are a U.S. citizen. If you are a foreign citizen, you don't have to report anything because remember, you foreign citizens don't need to report any transaction that happens outside of the U.S. So if you are selling property in Europe and you are a U.S. citizen, yes, you can deduct the taxes that you pay in the USA. So when you file the taxes for the sale of the property in Europe, and there are some taxes that you report in the USA and you pay taxes in the USA, yes, you take the taxes that you pay in the USA as a tax or as a foreign tax credit. And that foreign tax credit will allow you to pay less taxes in Europe because a portion of the taxes is paid in the USA.
Understood. Those are all of our questions for today. Thank you, Fulton, for your information. If you have any more questions, you can send them to our email, social media. We do have a private group on Facebook. We'll put the description down below, and we'll see you on the next video. Thank you.
Thank you.